In the year 2026, a monumental and unprecedented shift is poised to fundamentally redefine the entire cryptocurrency landscape as we know it. A staggering 99% of crypto investors are facing the harsh and undeniable reality of potentially losing everything they've invested as institutional money, once a driving force in speculative crypto, pivots dramatically and decisively towards more stable and regulated assets. This isn't just a market correction. It's a complete reevaluation of value and risk within the digital asset space, signaling a new era where traditional financial principles are reasserting their dominance over speculative fervor. The implications for individual investors who remain entrenched in high-risk ventures are profound and potentially devastating, as the very foundations of crypto investment are being reshaped by powerful institutional forces. The intoxicating allure of quick riches, often promised by highly speculative assets like meme coins, is increasingly proving to be a dangerous and deceptive trap for countless retail investors. While the initial surge of these assets can be exhilarating, their inherent lack of fundamental utility and reliance on social media hype makes them incredibly volatile and unsustainable in the long term. In stark contrast, a more calculated, strategic, and fundamentally sound investment approach is now emerging and gaining significant traction among sophisticated investors. This new strategy prioritizes tangible value, regulatory clarity, and sustainable growth over fleeting trends and speculative bubbles, marking a clear divergence from the chaotic and often irrational exuberance that has characterized much of the meme coin market. Institutional investors, with their vast capital and rigorous risk assessment frameworks, are increasingly and systematically moving their substantial investments towards real-world assets, commonly known as RWAs. This strategic shift involves the innovative process of tokenizing traditional, tangible assets such as highly stable U.S. treasuries, valuable real estate properties, and precious commodities like gold, integrating them onto secure and transparent blockchain networks. This groundbreaking convergence bridges the gap between traditional finance and the decentralized finance ecosystem, offering a new paradigm for asset ownership and management. It represents a deliberate move away from purely digital, speculative assets towards investments backed by real-world value and established economic principles, providing a much-needed layer of stability and predictability in the volatile crypto market. This powerful convergence of traditional finance and decentralized finance, facilitated by the tokenization of real-world assets, offers a multitude of compelling advantages that are attracting significant institutional capital. These benefits include the revolutionary concept of fractional ownership, allowing investors to own a portion of high-value assets previously inaccessible. It also enables 24/7 trading capabilities, transcending traditional market hours, and significantly enhances liquidity for assets that were once illiquid. These innovations are collectively driving the RWA market to unprecedented heights, with projections indicating it will exceed a staggering $100 billion by the end of the year. This rapid expansion underscores the growing confidence in tokenized real-world assets as a stable and lucrative investment avenue, fundamentally reshaping how value is stored and exchanged in the digital age. The accelerating shift towards real-world assets is being fueled by several critical factors, including the increasing regulatory clarity that provides a stable legal framework for institutional participation, the mainstreaming of digital assets within traditional financial institutions, and the attractive prospect of stable, predictable yields. Major financial powerhouses, such as BlackRock, the world's largest asset manager, and KKR, a leading global investment firm, are not just observing this trend. They are actively leading the charge, deploying significant capital and resources into the RWA space. Their involvement signals a profound endorsement of tokenized assets, validating their potential as a legitimate and integral component of future investment portfolios. This institutional leadership is accelerating the adoption and legitimization of RWAs, paving the way for a new era of digital finance. In stark and alarming contrast to the stability and institutional backing of real-world assets, meme coins continue to operate in a highly speculative and precarious environment. Their value is primarily driven by fleeting social media hype, viral trends, and community sentiment rather than any inherent utility or robust fundamental analysis. This makes them inherently volatile and extremely susceptible to manipulative pump-and-dump schemes, where early investors artificially inflate prices before selling off their holdings, leaving later entrants with substantial losses. The lack of underlying value and the reliance on speculative fervor create a dangerous ecosystem where rapid gains can quickly turn into devastating losses, highlighting the significant risks associated with these digital assets. In the volatile world of meme coins, retail investors often find themselves in the unenviable position of becoming exit liquidity for larger, more sophisticated holders, often referred to as whales. These whales strategically accumulate vast quantities of meme coins at low prices, then leverage social media and influencer hype to drive up demand and price. As retail investors, drawn in by the promise of quick profits, begin to buy, the whales systematically sell off their holdings, cashing out their gains and leaving the latecomers holding depreciating assets. It's estimated that a staggering 99% of meme coin traders, by chasing these speculative pumps, ultimately lose money, underscoring the predatory nature of this market and the significant financial risks involved for individual investors. The broader cryptocurrency market, beyond the realm of meme coins, is also grappling with significant challenges and vulnerabilities that demand serious attention from investors. Bitcoin, the flagship cryptocurrency, experienced a brutal crash in early 2026, plummeting below $63,000 from an all-time high of $126,000 just months prior. This downturn was attributed to a confluence of macroeconomic headwinds, a noticeable institutional pullback, significant ETF outflows, and the unwinding of highly leveraged positions. Furthermore, the crypto space continues to be plagued by rampant scams and fraudulent activities, with an estimated $17 billion stolen from unsuspecting investors in 2025 alone. These incidents highlight the persistent risks of market manipulation, security vulnerabilities, and the ever-present threat of financial deception within the digital asset ecosystem. As the cryptocurrency market continues its inevitable maturation, a more informed, cautious, and strategically sound approach to investment becomes not just advisable, but absolutely essential to navigate these increasingly turbulent and complex waters. The days of indiscriminate, speculative investing are rapidly drawing to a close, replaced by a demand for due diligence, fundamental analysis, and a clear understanding of underlying value. It is imperative for investors to critically assess their portfolios, moving away from high-risk, hype-driven assets towards more stable, regulated, and value-backed investments. Don't fall victim to the allure of quick riches. Instead, strive to be among the discerning few who understand the evolving landscape and protect their capital, rather than becoming part of the 99% who face significant losses. To gain a deeper understanding of these critical market shifts and to equip yourself with the knowledge needed to protect your investments, we urge you to subscribe to our channel. We provide expert insights, in-depth analysis, and actionable strategies designed to help you navigate this rapidly evolving financial landscape with confidence and foresight. Stay ahead of the curve, understand where institutional money is truly flowing, and learn how to make informed decisions that safeguard your financial future in the dynamic world of digital assets. Join our community today and empower yourself with the information necessary to thrive amidst these transformative changes.